Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems for Chapter 5, the exercises Group B. Note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you do not understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. Right now, in the last video, we had worked on 531B, okay? And basically, that was about getting the cost of the ending inventory, meaning if you had watched 528, 529, and 530, we had purchases, we had cost of goods sold, and then we had our total inventory value. Okay, and so this here, 531 is about the cost of ending inventory, which was this total value. Okay, but now in 532, we're using the same data as from 531. Okay, but we're going to compute the cost of goods sold. Oops, page down. Boy, that jumped up pretty far. All right, come on, there we go. So here, sorry about that. So for 532, we're going to be concerning ourselves with the cost of goods sold, meaning what happens when we make a sale. Okay, that's affecting our what is in our inventory, right? And again, you can create the great big table like I did here for 529 and for 530. You can create all of this table and work all of this out this way, but I'm not going to do that, all right? Because in 531, all we wanted to know what was our total value, so all I did was just work the numbers, and I'm going to do the same thing here. All I'm going to do is just work the numbers, okay? So under FIFO, you know, we're concerning ourselves with the cost of goods sold. In other words, when items are being taken out of inventory and put the cost of goods sold. So when we make a sale, as you recall, every time we make a sale, we make a journal entry for the sale of the inventory, the sale of the item. In other words, what affects our revenue account. But then we have to make a second journal entry to take the item out of inventory and put it the cost of goods sold. So here, we're selling 11. All right. Well, when we sell 11, where are those 11 coming from? Well, using FIFO, the 11 are coming out of what we had in our beginning inventory. So they were valued at 267 each, okay? And so that means 11 times 267 times 267 is, 11 times 267 is 29, come on, pen here, there we go, is, boy, oh boy, 2937. Okay. Okay. Then, so here we only have 6 left here. Okay. Because we take 11 out of the 17, that gives us 6 left. All right. So now when we make a sale of 10 here, now remember we're buying 16 more. So we have 6 in inventory, and then we also have now an additional 16 inventory. And when we're selling 10, the first ones in are the first ones out. So we're going to get rid of this here 6 at 267. And we need an additional 4 out of the 16, so that'll give us 12 left. So that's 4 at this 271. Right? So 6 times 267 1602, and 4 times 271 is 1,084. Okay, and then we have an additional sale here of 7. Okay, so we have to take 7 more out. Well, which ones are the first ones in? Well, the only thing that we have left in inventory are these 12. Okay, out of at 271 here. All right, so we have, when we take out the 7, that means we will only have 5 left, right? But we're taking 7 out at 271. So 7 times 271 is 1897. Okay, and then all we need to do is just add all of those up. All right, so we have 2937 plus 1602 plus 1084 plus 1897, which gives us our cost of goods sold ending being 7520. Okay, that's what it is for FIFO. Okay, now for LIFO, we're going to go in the opposite direction. Remember, FIFO, we're starting up here and we're working down. When we're talking about LIFO, we start at the bottom and we work up, okay, because they're the last ones in. So, we have 17 to begin with, right? And we're making a sale of 11. So 11 of those have to come out, means there's only 6 left. So I still have my 11 at 267 is 2937. Then I'm going to add in 16 more here, right? I'm going to get 16 more. Okay. So I no longer have that. I have 6 here. Okay. Now we're going to add in 16 more, right? And now we're going to make a sale of 10 more. Well, those 10 more, where do they come from, right? Well, being LIFO, the last ones in are the first ones out. Well, which one are the last ones in? Well, the last ones in are these 16. Okay, so we take 10 out of the 16, and they're valued at 271. So that's 2710 that have come out. Now, this should still be 6, and out of the 16, we still have 6 left. Okay, and this really should have been, oops, take 10 out of the 16, that should be 6 left here. Sorry about that. Okay, so that took care of these here 10. Now, I'm going to make 7 more, right? I'm going to sell 7 more. Well, again, the last ones in, are still these here. So I have to get rid of those 6. So that's 6 at 271. And I need to take 1 more. So 1 more has to come out of those. So now I have 5 left here. And that means 1 at 267. So 6 times 271 is 1626, and 1 at 267. So now I add everything up in that column, and I end up with 2937 plus 2710 plus 1626 plus 267, and I end up with 7540 as my cost of goods sold. Okay, and so which method results in a higher cost of goods sold? Well, obviously the LIFO ends up because it's $20, greater. Okay, that's it. Just I'm not going to go back over it. If you watched, 5-31B, all right. It's even though we're doing total inventory value, it's the same kind of thinking. And again, if you go back to 28, 29, and 30, okay, and by creating that the entire table, you're able to begin to see it on that table, and that's what you would actually have in the workplaces. You would have the schedule or the perpetual inventory record in the workplace, and if you had that record and somebody wanted to know, like what your cost of goods sold is, this is what you would end up doing. Okay, you would end up doing all the math like this, depending upon whichever method that you had originally chosen. If you're using FIFO, well then you do the math like this to figure out your cost of goods sold, and because you're not going to get that inventory, that information from the perpetual inventory record, unless of course you were doing something like an Excel spreadsheet and you actually wanted to track that. So the Excel spreadsheet, you'd probably be able to put in these calculations so that all you needed to do was just pull it up on the screen and take a look at it, and you didn't have to do the math. But if you're a small business, you might be doing this on a on a notebook, a sheet of notebook paper, or on an index card or something like that, and in which case you'd have to do the math. Okay, so that's why even though this here is an exercise in understanding FIFO and LIFO, it does have some practical application in the workplace. Okay, so that's it for this. And if you don't understand, feel free to contact an instructor, but I'll see you in the next video.